The company's growth has been propelled by the acquisition of a massive purpose-built state-of-the-art cultivation facility it acquired at a fraction of its build cost. Cannara continues to have room to scale within this facility, providing it with cannabis supply needed to fuel its growth and expand distribution across the country as it focuses on winning in the Canadian market. With that, I'd like to welcome Zohar, CEO, and Nick, CFO, for their presentation today. I believe I am turning it over to Nick. Over to you.
Thank you, Andrew.
Good afternoon, everyone. Thank you for having us today. I'm Zohar Krivorot, founder and CEO at Cannara Biotech.
And I'm Nicholas Sosiak, CFO of Cannara Biotech. We've been deeply involved in every aspect of this company since 2019, from cultivation to processing, finance, strategy, sales, marketing, and product development, working alongside our team to drive Cannara's success. Cannara is emerging as one of Canada's largest vertically integrated cannabis producers, driven by strong financials, innovation, and a consumer-first approach. At the core of our success is the vision and leadership of our CEO, Zohar Krivorot, who is deeply involved in our core activities on a day-to-day basis. And that hands-on approach from Zohar, myself, and our 400-plus employees has been the key to our success. What truly gives Cannara its competitive edge is our control and execution. We've built one of the most cost-efficient operations in the industry while maintaining market-leading quality. Our disciplined financial strategy allows us to scale sustainably, a challenge many others in this space have struggled with. And that's exactly what we'll cover today: how Cannara has positioned itself as a leader in this evolving industry. Just a reminder before we continue that all information presented today is subject to our general disclaimers on financial measures and forward-looking statements, which are available to be read in detail at sedarplus.ca. Cannara Biotech stands out as one of Canada's fastest growing and most profitable cannabis producer. We've consistently delivered market share growth, strong revenue performance, industry-leading margins, and positive cash flow across the board. Our market share expansion has outpaced our peers, driven by best-in-class facilities, superior operational execution, and strong consumer demand for our product portfolio that focuses on consistency, premium, and quality offerings at an affordable price. Our home province of Quebec is our key part of our success. As Canada's second largest province with over 9 million people, it provides us with a home field advantage and access to some of the lowest utility and labor costs in Canada. Since these costs account for 75% of our indoor cultivation expenses, this gives us a significant margin and cash flow advantage while delivering exceptional value to our consumers. Let me give you a few key stats. We are the 7th largest licensed producer in Canada by sales and climbing fast as we scale. We are the 4th largest producer by facility size, with 1.6 million square feet of built-out space and a potential annual capacity of 100,000 kilograms. As of November 2024, we hold 3rd market position in Quebec with 12.9% market share and 7th nationally with a 4.1% market share, both rising steadily every quarter. It really comes down to 2 things. Every decision we make, from pricing to facility expansion, is designed to ensure sustained and profitable growth. We don't just scale, we scale smartly, making sure our quality, efficiency, and execution are second to none. Cannara's financial performance speaks for itself. In an industry where profitability remains elusive, we continue to deliver strong and consistent results. For Q1 2025, we posted $25.1 million in net revenue, marking a 29% year-over-year increase. Our gross profit before fair value adjustments was $9.8 million, maintaining an industry-leading margin of 41%. This quarter also marked our 15th consecutive quarter of positive adjusted EBITDA, coming in at $6 million. We generated $2.3 million in net income, but more importantly, we delivered $5.8 million in operating cash flow and $4.6 million in free cash flow for Q1 2025, representing a 23% and 18% margin respectively. As proud as we are of our brand success, We believe that top-line revenue means nothing if it doesn't translate to the bottom line. And that's why we're especially proud of our industry-leading cash flow generation and cash flow margin. This consistent profitability has resulted in a robust balance sheet with over $10 million of cash on hand and over $36 million in working capital. Our 100% owned facilities are Cannara's competitive advantage: scale, efficiency, and cost leadership. A perfect example is our Valleyfield facility, a $250 million state-of-the-art cannabis facility we acquired for just $27.9 million in 2021 from the Green Organic Dutchman. This gives us one of Canada's largest and most advanced indoor cannabis operation at a fraction of the cost. With Valleyfield, we can triple our current cultivation capacity. Zohar, can you give our viewers some insight into what Farnham and Valleyfield looks like?
Yeah, our Valleyfield facility, which we acquired in 2021, is 1.1 million square feet, purpose-built for cannabis cultivation. There are 24 growing rooms. Each room is 25,000 square feet and holds 10,000 plants. Today, we're growing 10 rooms, and we are on target to activate 2 more rooms in the next 4 months, for a total of 12 rooms. The balance of the 12 rooms will be turned on in the next 36 months, bringing our total cultivation capacity from 40 tons to 100 tons per year. Our Farnham facility, which is located an hour away, it's 625,000 square feet, which we occupy 200,000 square feet today.
The Farnham facility is dedicated to the operation of our nursery, our pheno hunt process, post-harvest, and packaging. The balance of the building's 425,000 square feet is currently leased out to 2 tenants, which generates us over $4 million a year in rental income. Together, both of these facilities give Cannara the foundation it needs to execute on our growth. Cannara's growth strategy is simple. The foundation is in place, and all that's left is execution to grow our current capacity 2.5 times, and in turn, our revenue. With massive uncaptured market share still on the table, we are expanding strategically and profitably. We have taken a slow and steady approach, and over the next 3 years, we will be fully built out and achieve our phase 1 goal of being Canada's top producer. Cannara's success comes down to 3 key advantages: premium quality, scalability, and cost leadership. All traits built into our 3 flagship brands, Tribal, Nugs, and Orchid CBD. We produce top-tier cannabis at scale. We hang dry, hand trim, slow cure our cannabis to ensure consistency and without irradiation, fueling high demand for our brands. Our 1.6 million square feet of production across 2 mega facilities gives us massive expansion potential. And with only 40% of our capacity activated, we can scale profitably with minimal investment. Quebec's electricity rates are 50% lower than Ontario, 3 times lower than Alberta, keeping our margins high while maintaining industry-leading pricing. While many Canadian LPs are expanding overseas out of necessity, we are thriving in Canada by choice. The reality is that most can't compete profitably here. They're losing market share, struggling to build brands, and failing to operate efficiently. This industry isn't just about capital. It's about experience, knowledge, and most importantly, execution. Cannara has built this from the ground up. Every process we've developed is designed for long-term success, not short-term survival. Our Canada First strategy has driven national market share from 3.2% to 4.1% in just 1 year, marking us as one of the fastest growing LPs in Canada. We now hold #1 position in key premium categories, such as live resin vape carts, CBD flower, infused pre-rolls in Quebec, and hash rosin in Ontario. And what sets us apart isn't just our pricing, it's our quality and consistency. When consumers choose Cannara brands, they know exactly what they're getting: top-tier cannabis at the best value. Cannara Biotech is not just another cannabis company. We are market leaders, a disruptor, and a company built for sustainable, profitable growth. Our financial performance speaks for itself. Again, 15 consecutive quarters of positive EBITDA, industry-leading margins, operating and free cash flow, and our market share is up over 20% in 1 year. We dominate in key categories with constrained demand for our leading brands and no clear demand ceiling, yet we still have the ability to triple our production capacity organically. Most importantly, our foundation is built for long-term success. With world-class operations, financial strength, and relentless execution, we believe we are positioned to shape the future of Canadian cannabis. And all of this can't happen without a dedicated team. And I firmly believe that we have one of the most strongest teams in cannabis that is 100% dedicated to Cannara's success, all guided by an executive team that leads by example. Thank you for taking the time to learn more about Cannara. Andrew would be more than happy to open the floor and take your questions.
Great. Thank you so much, Zohar. Nick.
Are we able to turn on the camera?
We can see the camera, Andrew.
Okay. We will see if we can get that camera on for you. Again, there might be a prompt at the top of your screen to turn on the camera, or you can turn it on. You're using the button at the bottom of the Zoom webinar. So hopefully we can get that working.
Yeah.
I'll go ahead and ask the first question here. It feels as if Cannara has somewhat of a fortress position in Quebec. You've built such a strong market share and customer following within that market, and yet it still seems as if it's early days for the company across most of the rest of Canada. Oh, there you go. Well, nice to see your faces. Welcome. It still feels as if it's early days for Cannara across much of the rest of the country. What is your strategy to maintain the strong market share you have seen in Quebec while continuing to expand market share in other provinces as you expand your distribution and your products across the country?
Well, we have a very close relationship with the Quebec SQDC, which is the dispensaries that are run by the government. We're made in Quebec for Quebec. That's been from day one. We pay close attention to feedback that we get from the Quebec market. And I think there's not many other Quebec players that can participate in this. And this is why, as long as we keep the pheno hunting process, the quality, the consistency, and the price, by being in Quebec, that gives us a huge advantage over the others.
As Zohar said, it all comes down to our value proposition. The product speaks for itself. In Quebec, what's important to know is that there's no marketing. So really, it's the product quality, the price, the consistency that really pushes the product, pushes your market share. And that's, if our quality was not good, we would not be a 12.9% third position in Quebec. So it's hands down, it's clear. But we spent $0 in marketing in Quebec to gain that position. So that's just organic growth from consumers enjoying our product. We've been focused in Quebec, built in Quebec for the past 4 years, little investment in marketing and sales across Canada at all. And now since Q1 2025, we've really started investing in a sales team. We had 2 salespeople across Canada for our whole revenue generation. So now we've upgraded that to 6, going on to 7. Doing it. We had no trade display programs in stores. So if you walked into most cannabis stores across Canada, you would not see any Tribal, Nugz, Orchid banners or discounts or anything like that. That's with that ability, that strategy, the sales and marketing strategy, coupled with product quality, we believe that we can replicate the percentage, the market share that we have in Quebec, which is a 12.9, 13, climbing up to 14% soon across Canada.
That's great. And then, in your presentation, you clearly demonstrated the spare latent capacity you have and the opportunity to build into that over time within Cannara. That's within your existing facilities today. What needs to happen to ensure that as you grow, as you build that capacity, that you're also building demand over time. I think you were alluding to some of the maybe pushing on sales and marketing efforts a bit more and expanding.
Sales and marketing, but that's one avenue to get, sales and marketing will never will get you distribution, but it will never fuel, the business the consumer needs in cannabis. There has to be an innate innovation, quality, consistency in the product. And that's, so you have sales and marketing pushing, but then at the forefront, we have innovation. So, we spend, I don't know how much we spend, I know how much we spend actually, but we spend a lot of time and a lot of resources on the pheno-hunt process. So that's finding cannabis genetics. We truly believe to build a sustainable cannabis company, you need those cannabis genetics. We're the only agricultural industry where, we find a genetic and 3 months later, 6 months later, and, we have to find a new genetic to cater to the consumer needs. We've proven that if you do the work, you can have long-lasting genetics. Our Gelato Mint, our Cuban links we launched in 2019 are still one of the best sellers that we have today. So we're in the process of finding all these genetics, all these what we call unicorns that have high yields, that have high terpene profiles, high THC profiles, and then releasing them under their brands. And then that's just going to fuel demand, accelerated by our sales and marketing strategy to get to our goal.
Great. And then in your presentation, I think you made it clear that you're focused on the Canadian market. You see a big opportunity to grow here in Canada. What would it take for the team to look at international growth opportunities? Or do you think that there's still so much latent opportunity just here domestically that it's not worth it in the immediate term?
I think that's a great question, Andrew. I think the opportunity in Canada is huge. And we're, there's really no point for us, at least, to look at international if we just want to focus and really go after the low-hanging fruits, which is right here in our backyard. It's easy, with brand loyalty. It's the only way to bring to build that with consumers here in Canada, and the market is there. I think we are just got to stay focused, keep doing what we're doing, consistency, price, quality. Get consumers to really believe in our brands and like I said earlier, build that brand loyalty. And if we ever do have any excess inventory in the future, once we achieve our 100 tons or 100,000 grams, 100,000 kilos, then we may consider looking at international. But right now, I told all my sales and marketing and finance teams to just keep focusing in Canada. And that's really where the opportunity is. As more and more of my competitors start switching and looking at international, that's where we come in even stronger and say, listen, let's just focus and do what we do, but do it here in Canada.
Great. Thank you so much, Zohar and Nick, for joining us today. Again, to our listeners, this was Cannara Biotech, ticker symbol LOVE, LOVE, on the TSX Venture Exchange. I want to thank Zohar and Nick again for presenting to us today, and congrats on the momentum in your business.
Thank you, Andrew.
Our next presenter is MTL Cannabis. MTL Cannabis is a flower-first Canadian cultivator and processor that aims to bring craft-quality cannabis at scale to the Canadian market. From its facilities in Ontario and Quebec, the company has more than 18,000 kilograms of annual cannabis production capacity, from which it serves recreational, medical, and international markets. After the acquisition of Canada Health Wellness in 2021, and following a period of integration and turnaround, MTL Cannabis has emerged as a profitable, fast-growing enterprise that is ready to capitalize on growth opportunities across its multiple sales channels. I'm very pleased to welcome Mike Perrone, CEO of MTL Cannabis. Mike, please go ahead with your presentation.
Thank you very much. Is everything all good for the presentation viewing?
Everything's looking fantastic.
Awesome. Well, first off, I want to say thank you, Andrew. Thank you, Peter, for hosting us, and to the over 100 viewers, thank you very much for giving us the time today to learn a little bit about MTL Cannabis. So I'll start off obviously with the standard disclaimer for all information inside the deck, but Really, who is MTL Cannabis? We are a licensed processor and cultivator located within Canada and listed on the CSE under the symbol on the ticker MTLC. We participate in all the major revenue channels that Canadian cannabis producers can participate in, vis-a-vis the Canadian recreational, the Canadian medical, and the international markets. All three of our revenue channels are growing faster than the Canadian market. And we generate profitable revenue from all three sources. And really, the strength of our business really is on our team. And I'll speak to our team and our experience and how it translates into our results as we go through the presentation. I'm sure the audience is going to be seeing about 15 different cuts of Canadian market data, so I won't spend too much time on that today. But really what we've seen in the Canadian market it still continues to grow. It's well over $5 billion in sales right now. And it continues to trend upward as brick and mortar stores start to roll out and more conversion comes from the illicit market in Canada. And really, when you look at the size of that pie that's getting bigger, what does that pie look like? At the end of the day, even after 6 years of legalization, flower products still predominantly own the market. Roughly, give or take, 70 cents of every dollar spent is on a flower or a pre-roll product in Canada, and those are the markets that we focus on. And I'm going to speak on focus and discipline with our strategy as we go through the presentation. But primary products for us are flower and pre-rolls. We also do hash with our derivative products, so we have access to roughly 75 cents of every dollar spent in Canada. In the retail market. When you look at the international side of the business, this is an area that's incredibly exciting to us, and I know a lot of the other presenters here today. What we've seen in the first 6 months of track data in fiscal year 2024 for Canada, it was almost 70 tons of product has been exported, which is almost 100% year-over-year increase from the previous year period. And when you look at two of the larger countries in the world that are importing, you have Germany with over 70 tons in fiscal year 2024, and Australia with over 42 tons in fiscal year 2024. Both of those primarily serviced by the Canadian exports. So not unlike anything from our natural resources here in Canada or auto parts. We are a trusted partner for the global markets, and cannabis is no different. And this is an area where we, in addition to the domestic market, we see a lot of tailwinds for our industry. So when I look at the catalyst, as I said, the Canadian market continues to grow. The pie is getting bigger, and we're starting to see what consumers are purchasing. And like I said, it's still roughly 70 cents of every dollar is in flower products. The international markets are exploding, and competitors are leaving the industry, which is a benefit to not only ourselves, but all the other presenters that you're going to be seeing today. And those competitors are leaving either voluntarily or involuntarily. And when you think about involuntarily, if you look at the CCAA listings in Canada over the last couple of years, the largest segment has been cannabis companies. So at the end of the day, that just creates more shelf space for a lot of the participants you're going to be seeing here today. And then also voluntarily, you're seeing companies divert to become craft beer roll-up companies in the US, or simply leaving the Canadian market due to the fact that it's highly competitive and only focusing on exports. And so that's something where you're starting to see the shelf space open up a little bit for a lot of the participants you're seeing here today. And on top of it, the legacy market continues to erode. So really, how does MTL Cannabis participate, and how do we benefit from this? And I'm going to speak to this as we go through the presentation, but it really comes down to our team, our operations, our focus, and our leadership in the industry, and how we approach the industry, which is a little bit more unique for this space. It would help to go back a little bit of the history of MTL Cannabis to really understand our story and where we are. Founded in 2018, originally was a founder-led business operating out of Pointe-Claire, Quebec. Always profitable, flower-focused, positive cash flow business that really ran into a problem of production capacity to meet the demand. Demand has always exceeded our ability, demand has always exceeded our ability to supply the market, which caused the original founders to really look at what was out there to expand the business from a corporate development perspective, and that included everything from M&A, looking at distressed assets, brownfield opportunities. But at the end of the day, it led us to the Canada House Wellness opportunity, which was to be honest, a distressed public company. Once we were able to really sink our teeth into the acquisition and get our hands on the company, just to give you an understanding of what we started with Canada House, When we got our hands on the business, it was operating with a $7 million operating loss in their last full year financials and $11 million net loss. Within 1 quarter, we were able to bootstrap the turnaround to get positive operating income. And then after 2 quarters, we were able to get positive net profit and positive cash flow with the operation. Since closing the transaction, what we have done is fully integrate all of our assets, our supply chains, our operations, and really maximize the efficiency of our business. And this is really done with no capital injection, which is very unique in our industry, where we never had an opportunity to participate in the euphoric markets that were 2017, 2018, where you can snap your fingers and raise $30 million in an oversubscribed deal overnight. So we did not have those advantages, but we were able to make the most of what we had and turn it into a profitable company. And since then, what we have done is continue to expand our business, both from a channel and production capacity standpoint. So we've expanded all of our operations and all of our assets to continue to try and meet that demand in the market, and we continue to improve our efficiencies while doing so. So a little snapshot of how we operate and where we operate. So we have 2 assets in Quebec, 1 in Ontario. Our primary asset is our MTL Cannabis facility in Pointe Claire. Produces around 9 tons of capacity. We've retrofitted and expanded that over the last 2 years, and that's our primary production and distribution hub for the recreational and the international markets. During the transaction, we also took on the IsoCanMed facility up in Louisville, about an hour outside of Montreal. The Louisville facility was an amazing facility that needed some work on the operations side, but had a really, really strong team operating within it. Since taking over the Canada House business, we've retrofitted their facility to realign their operations, as well as doubled the capacity in the last year. And now what was a facility that did not have the most efficient operations is now our lowest cost per gram producer at scale in our business. In addition, we have our Abba facility in Pickering, Ontario, which we've also retrofitted to generate around 2.5 tons of capacity per annum, and that also serves as our medical fulfillment and distribution hub for the business. When it comes to our channels and how we operate in the Canadian recreational market, we have 3 brands: our MTL Cannabis brand, our Low Key by MTL Cannabis brand, and our Rebel brand for the Quebec market. In the Canadian medical market, we have our Abba platform, plus our Canada House clinics, which I'll speak on in the upcoming slides. And in addition, we have our global export market, where MTL product is being pushed around the world. When it comes to the recreational market, as a lot of you know, the Canadian market is the most competitive market in the world when it comes to regulated cannabis. We've been very fortunate to be a strong performer in this market, and it really is driven by quality and consistency. Just to speak to the brand impact that we have had, there was a Brightfield study done last year that covered over 500 dispensaries across the country, and we came out as the number 1 recommended brand by budtenders, and that really is driven by the fact that budtenders and the dispensaries in Canada can really rely on MTL Cannabis, not only to generate margin, but also velocity for them. And we've become a trusted partner to the retail sector in Canada. We are a very competitive culture, and we still participate in things like the Karma Cup, which is usually reserved for small craft producers, but we enjoy competition, and we won it in 2023, and we're a finalist again in 2024. And we also won the Brand of the Year at the Grow Up Conference last year as well, just to speak to the brand equity that we are building in the Canadian market and continue to invest into today. Speaking on the medical side of our business, this is an area where I'm very much enjoying building out, and this is something that came with the Canada House transaction, both with Abba and the Canada House clinics operation. So what our medical business really is, it is focused exclusively for the Canadian veteran. And for those who are not aware of the Canadian veteran market, it is the only group in Canada that actually has 100% insurance coverage. Most insurance coverage is maybe 20% at best. We're not chasing down medical patients for collections. We work with Blue Cross, so we have one vendor. That market is 27,000 active veterans right now, and it has been growing at mid-teens, 13, 14, 15% each of the last 3 years, respectively. We currently serve over 3,400 veterans, and we're looking to continue to grow our market share within that segment. And we think there's a lot of tailwinds, both from the actual expansion of that market and our ability to go and expand our market share of that market. We also have our Canada House clinics, which is originally what Canada House Wellness was founded on. We operate 12 clinics across the country, all of them located next to military bases. So you're able to work with the active military and new veterans as they come off base, and you're able to help aggregate them into our clinics and all of our partners. And the nice thing with our Abomedics facility is not only is it feature the MTL Cannabis brand and products, but we're also able to feature the best in Canada with a lot of our partners who you're actually seeing you're seeing here present today, who are suppliers to our Abomedics platform and have become great partners over the last few years. On the international side, this is an area that we've really expanded to over the last few years. Just with my background working in international cannabis and our team, we've been able to open up channels in Germany, Australia, Poland, and the United Kingdom. And as our capacity continues to increase, and as we continue to increase our cultivation footprint within our operating assets, we're going to continue to fulfill these markets. Obviously, defending home field first and prioritizing Canada. But as our capacity grows and we're able to satisfy the domestic demand, we can start to look at servicing the international demand as well. We've been in Germany for well over a year now, and some of our strains are some of the top performers in that country. And we're just starting to launch into the Australian market and soon the Poland and the United Kingdom. Really, what does this all come down to is the financial results. And what I've highlighted here is where we are year to date, so our first 9 months, starting with $77.9 million of revenue. So we're continuing a growth trajectory for the business, up 20% year over year. And then really when I speak about our team and our operational focus of efficiencies, it really is shown in our margins. So at this point last year, we had a 43% gross margin before fair value adjustments, which would put us in the top 10 percentile of all producers in Canada. Since then, we further enhanced those margins to over 50% now, which has led to obviously an increase in operating income to the tune of 124% year over year growth. And really what we've had to rely on as a business is our cash flow from operations. So cash flow from operations is the lifeblood of our organization. As I'm sure you're well aware, the capital markets and the debt markets are pretty much non-existent to our industry at the time being, and definitely not what they were 5 years ago. And so for us, we've had to self-finance everything. And so when you look at the history of our business going back to the timeline, we've been able to not only fund our growth and organic growth capital, but also expand all 3 facilities, in addition to paying back legacy creditors we inherited from the Canada House transaction to the tune of $8.5 million, while continually increasing our cash balance. So for us, it always comes down to generating cash flow from running a business the right way. And it's led to an adjusted EBITDA of $14.2 million, which is a 100% increase year over year, in addition to $14.4 million of just general regular EBITDA. As I said, our revenue continues to trend upwards. Through 3 quarters, we're almost surpassing our revenue total of $83 million from last year. And we're looking to continue to increase that revenue curve as our cultivation capacity continues to increase, and our focus strategy in each of our 3 markets continues to grow and develop over the next few years. A little bit about our team. Like I said, I really lean on our team for our performance, and we have a very unique team with a very unique background, whether it's on the corporate side or the operational side. So really starting with myself and our CFO, who have over 10 years of corporate experience in the cannabis industry, in addition to having a track record in the non-cannabis industry or external to the cannabis industry, working in both the US and Canada in blue chip global organizations, and really bringing that expertise into this industry. We're early employees at MediPharm Labs, where we're able to demonstrate starting with a pre-public, pre-revenue company and helping drive over $129 million of sales in its first year and $29 million of EBITDA, while taking the company public and uplisting from the TSX Venture to the TSX in 6 months. On the other side of the coin, we have our founders and directors, who started the company and really are the core for our operations on the cultivation and the post-processing side of things, and really leaning on their experience of combined over 40 years working in regulated cannabis, starting on the MMAR side of things and making the journey all the way through MMPR, ACMPR, and the Cannabis Act, and really leaning on this team and our teams working with us to focus on developing a strong set of operations that leads to the financials that we've walked through. A little bit of a snapshot in our capital structure to show where we're sitting at a $42.1 million market cap right now, or as of Friday. And really, when I look at the future of our business and where we go, is we will continue to stay focused on our strategy, focused on the fundamentals, and focused on generating meaningful cash flow by delivering consistent, high-quality product and services to our market. And that is MTL Cannabis.
That's great. Thank you so much, Mike, for your presentation. I'll start off here by commending you on the businesses and the full MTLC team, I should say, on the success that the organization has seen over the past few years. It's obviously been an exceptional acceleration in revenue and earnings momentum, led by the company's investments in its facilities and operational efficiencies. What are the next steps for the organization to ensure that it maintains momentum in the years ahead, and where does MTL Cannabis go from here?
For sure, and that's really two-pronged. Obviously, starting with our focus on operations, as you noted. So always continuously bringing in new genetics, bringing in new products, ensuring that consistent, high-quality product is going to the hands of the consumers, and continuing to support that demand, and in the back end, continuing to expand our operations. So for us, like I said, the history of MTL Cannabis could really be described as supply trying to chase the demand curve, and we're continuing to chase that curve by continuing to do things, focus on that quality. And on the other end, on the corporate side, is continuing to be fiduciaries to the company. Like I said, we really have to rely on ourselves for cash flow generation, and I commend our CFO and our entire finance department for elite level treasury, what I would call elite level treasury management, to manage both expansion, organic growth, as well as supporting, taking care of our creditors, and doing that without diluting our shareholders.
Great. And maybe just one more, in the interest of time, how much additional room for growth do you think that your current cultivation facilities can support? And how will MTL Cannabis continue to drive further growth once those are fully utilized?
Absolutely. So I do think we have a decent amount of footprint left to grow into. As always, it comes down to how much capital you have available to expand, to accelerate that growth. But I do think we do have both from actual floor space to move into, and also investments into our current grow rooms to enhance those yields and enhance those production numbers for us. So I think there's a significant amount both internally, but also there's opportunities as well with the changing dynamics in the market to look at additional space in the future.
Great. Mike, I want to thank you so much for your presentation and your time. I enjoyed chatting today. Again, to our audience, this is MTL Cannabis, ticker symbol MTLC, listed on the Canadian Securities Exchange. So I want to thank Mike again for his presentation.
Thank you again, Andrew.
Up next, we have Auxly Cannabis Group. Auxly is among the leading suppliers of the Canadian cannabis market and an early mover in the industry. The company took a unique approach of prioritizing Cannabis 2.0 products in the early days of the Canadian cannabis market, and its early product innovations helped it to take sizable market share in the emerging categories such as vapes, concentrates, and edibles at that time. Auxly has never lost its focus on innovation, and today it operates a 1.1 million square foot purpose-built, highly automated cultivation facility that is the engine for the company's growth. With an expanding assortment of products, a renewed focus on flower excellence, and leading brands, Auxly remains well-positioned to capture growth in the Canadian cannabis market. I'd like to welcome from Auxly, Hugo Alves, CEO, Travis Wong, CFO, and Mike Lickver, President, and thank them for joining us today. Hugo, Travis, and Mike, please go ahead.
Great. Can you hear me, Andrew?
I can hear you loud and clear.
Excellent. Julie, please get the presentation on the screen. But thank you, Andrew, and thank you, Ventum, for inviting us to participate, and of course to the audience for tuning in. As Andrew mentioned, Auxly is a vertically integrated Canadian cannabis producer. We specialize in the cultivation, manufacturing, and sales of branded cannabis products and focus on dried flower, pre-rolls, and vapes. We are publicly listed and on the TSX and OTC exchanges, and we're delighted to be with you here today. My name is Hugo Alves. I'm the co-founder and CEO of Auxly. With me today are Auxly co-founder and president Mike Lickfer and our CFO Travis Wong. Really appreciate the opportunity to give you an update on Auxly and why we're really excited about the company and its future. Next slide, please. Just some compulsory disclaimers, but while I have you here, I just did want to mention, as we announced this morning, we'll be releasing our Q4 and full year 24 earnings in just over a week on Thursday, March 20th, before markets open, and we're very excited to share those results with investors. Next slide, please. So while we're currently very focused on winning at home, our long-term vision is to be a global leader in cannabis products, to see our products and brands all over the world. And what drives us every day is our belief in the power of the cannabis plant, its power to help people live happier lives. And that is the mission that fuels our dedication every day to making high-quality branded products that consumers can trust and love. Next slide, please. And despite all of the challenges and headwinds that the industry has had to navigate, our passion and belief in the opportunity in front of us has never wavered. We remain very excited by the great cannabis opportunity and Auxly's ability to capture it. Next slide, please. Now, you've already heard a lot today about the continued growth of the global cannabis market. More and more governments are giving their citizens access to the incredible power of cannabis. Cannabis continues to be a once-in-a-lifetime growth opportunity, and Canadian companies, including Auxly, are very well positioned to participate and thrive on the global stage. But that is not our focus today, because we have always said, in order to truly believe that you can be a global leader, you have to win at home first. Slide, please. And thankfully, we've got a great market in Canada. It continues to grow. Cannabis was a $5.8 billion market in 2024 and contributed over $8.3 billion to Canada's GDP. More and more Canadians find cannabis to be socially acceptable. More and more Canadians are choosing cannabis as their preferred recreational substance, and more of those consumers are choosing to purchase their cannabis from safe, legal sources. We have a growing market in Canada, and it is also a fiercely competitive market and the most highly regulated in the world. If you can profitably win here, there is a reason to believe you can win anywhere. Slide, please. And it's also a great time to be a large-scale Canadian cultivator of high-quality cannabis, because for the first time in a long time, flower prices are increasing in Canada. As companies have exited the industry or converted to asset-light models and sold facilities, as international demand has continued to increase, it has created greater scarcity for high-quality product, driving prices up, and we believe those dynamics will continue given the high capital cost and time necessary to bring quality cultivation capacity online. So the Canadian market continues to grow, but with better pricing dynamics driving greater stability and growth. And that really brings us to why we're so excited about the future of Auxly and why we believe it is a great time to consider investing in Auxly. Slide, please. As Mike will outline, Auxly has proven that it can create quality products that win with consumers. Back 40 exited 2024 as the #1 brand in Canada overall and has remained there ever since. We are leaders in the largest, fastest growing product categories, and we have invested in the right assets and capabilities so that Auxly can continue to grow and thrive and take advantage of the great cannabis opportunity. And as Travis will explain, we are delivering strong, profitable results that will allow us to continue improving our balance sheet to give us a strong foundation from which to advance on our vision with confidence. We are still in a very young industry, still very early days, and Auxly is just getting started. We are executing against our strategy, we are winning at home, and we are excited about our future. So if you're considering investing in cannabis, we invite you to take a close look at Auxly. I thank you for your time today, and it's my pleasure to turn the microphone over to our co-founder and president, Mike Lickford. Mike?
Thanks, Hugo. I can get the next slide. Thank you. And one more. So thanks, Hugo, for the overview. I'm going to dive a little bit into more of a granular look at the company and our current performance and our asset base. So at a glance, founded back in 2017, we're headquartered in Toronto. We are on the exchange under the ticker XLY. First and foremost, our major strength has and is and will continue to be our people. We have 380 employees across Canada, and we genuinely believe it is our largest strength. So we dedicate a lot of time and resources year over year to investing in our most important asset, which is our people. We've developed a culture that is bar none, in our opinion, the best in the industry, certainly world-class, best in class. We have a culture of innovation and a culture of continually being the underdog, regardless of our performance and our results. So we take that very seriously and continue to invest in that. Moving over to the right, we're nationwide. As of late 2024, we were able to successfully enter Quebec for the first time in our company's history, and that brought us to being a national LP, truly. Our distribution is deep across Canada. We're in 97% of all stores. We currently have 5 brands with a mixture of everything from slight premium to core down to more medically focused. And as Travis will get into in a bit more depth, we have been growing and are continuing to grow at a healthy pace, and specifically out-indexing the industry growth last year by double digits. Moving on, hopefully my dramatic pause will indicate a slide change. So again, as Hugo mentioned, our strategy has been and continues to be winning at home, first and foremost. And our results to date speak to the execution of that strategy. As we sit here today, Back 40 is the #1 brand in Canada across all categories. We're really, really excited to see that and to know that that is a reflection of consumers voting with their wallets. We're the #4 LP in Canada. Right now, we have the #1 best-selling all-in-one vape brand, which is a category that we're proud to say we believe we had a strong hand in creating and driving change in the vape category to lead the growth of that category, which is the fastest growing category in Canada. We have the #1 best-selling flower brand, which is also Back 40. We have the #1 best-selling non-infused pre-roll brand, which is also Back 40. We have 2 state-of-the-art facilities that I'll cover in a moment, and we've had 6 consecutive quarters of positive adjusted EBITDA. Importantly, we also have 1 very large, valuable strategic partnership in Imperial Brands, who is also our largest shareholder. Jumping into our facilities, 1 of 2 is Auxly Charlottetown. This facility we acquired back in 2018. At the time, it was just a license in the queue and a shell. Today, we've built it into a purpose-built 52,000 square foot hub for innovation, vape manufacturing, and a driver of everything non-flower and even some flower product development and innovation. Out of this facility, we've launched hundreds of new SKUs. We've had 5 years of industry firsts to market, category defining innovations, from the 1 gram vape all the way to our new all-in-one that we launched 18 months ago. We've shipped over 26 million units out of this facility since legalization. This facility has produced the KIND 2024 Innovation of the Year, and since its inception has been fully licensed for processing and sales. But importantly, we have a full analytical lab in-house, as well as a full sensory study license for research and development. So really, when you think about our 2 assets, Auxly Charlottetown is advanced manufacturing for 2.0 products, and all things R&D and product development. Switching to Auxly Leamington, this is our 1.1 million square foot cultivation facility. We built this from scratch, highly automated greenhouse, advanced lighting, temperature, humidity control, really allows the delivery of consistent, high quality cannabis at what we believe are industry leading costs and quality. We have over 200 genetics in our genetic library and are constantly testing and finding that new and exciting strain to meet ever evolving consumer demands. Our current annual production capacity is 100,000 kilograms, and that's our, as of mid last year to late last year, that's our current run rate. We do have ability to continue scaling. We are a GACP, so CUMCS for international export, and in the process of getting EU GMP packaging capabilities in Leamington as well. In addition to the flowering space, we also have 250,000 square feet of built out expansion space. So whether it's manufacturing, whether it's a 3PL, whether it's an indoor cultivation, it's all there with the ability to expand. We have built on 40 acres. We sit and own 100 acres on the land that we're on. So as Hugo said, we are just getting started. Some of our success pillars here that we stand by and the strategy we're driving into 2025 and beyond. First and foremost, we're going to continue innovating and creating and producing products that consumers trust and love. It's been our motto from day one. We take it very seriously. And for us, that means innovation leadership. It means an efficient portfolio. It means to continue winning consumer-focused and customer-focused awards that are meaningful, and continue leadership in the fastest and largest growing categories. We're going to remain efficient and profitable. I've heard it today, top line is one indicator. We're really driven on profitability and our margin. So investments in automation and continuous improvement across all of our facilities and our processes are incredibly important to us. We believe we have the winning assets and capabilities, and we're going to remain in pole position with those assets, and we're going to continue strengthening our financial position. And I'm going to stop and pass it over to Travis because I'm definitely over time. So thank you, everybody.
Thanks. Next page, please. Thanks, Mike. Okay, I am pleased to share our financial results for the trailing 12-month period ending September 2024. Revenue reached $114 million, a 13% increase over 2023, driven by higher sales volumes in our core product categories. In dried flower, successful new genetics, including Liquid Imagination and Fire Breath, helped grow market share in flower from 3.9% in Q4 2023 to 4.5% in Q3 2024. In pre-rolls, our investments in automation are paying off, increasing volume while maintaining quality. We did in 2024 expand our Back 40 product line to include the 0.75 gram straight cut and infused pre-rolls. In vapes, the late 2023 launch of our all-in-one did expand the disposable vape category and has helped drive incremental volume. Looking ahead, we are committed to strengthening our leadership position in our core categories, and we'll continue to expand distribution and strengthen our retailer relationships. On the gross margin side, product mix shifts and operational efficiencies helped drive our gross margin from 34% to 42% on a TTM basis 2024. Higher cultivation yields did lower our costs. Efficiency improvements at our Auxly Charlottetown facility further reduced overhead, and contract manufacturing agreements for certain Cannabis 2.0 products also helped drive cost efficiency. SG&A expenses declined to $36.1 million, a 7% decrease from 2023. Our streamlined operations have led to reduced wages and lower admin costs. Adjusted EBITDA improved $18 million on a TTM basis, and net loss was $75 million, primarily due to non-cash impairment charges and asset settlements. Excluding these one-time items, net loss would have been $25 million on a TTM basis. We did end the most recent quarter with $19 million in cash, $264 million in total assets, and $57 million in total debt. We have, in 2024, reduced our total debt by 54% and successfully refinanced our debt facilities. So I will maybe move on to the next page. Okay, great. This is a nice visual showing our historical performance, demonstrating our track record to grow profitably. On a TTM basis, we did generate $21 million in operating cash flows, about a 160% increase from 2023. And I'll close on the next page. So we have built a strong foundation for continued growth by delivering trusted, consumer-preferred brands, driving efficiency and profitability, leveraging our winning assets and capabilities, and strengthening our financial position. With that, I would like to open this call for questions.
Great. Thank you so much to everyone. I'm going to start off with my first question here on 2025 in the year ahead. Obviously, Auxly is coming off a transformative year for the business. There has been exceptional progress on improving the company's balance sheet while simultaneously delivering much stronger financial and operational results. What is the company's primary objectives in 2025 as it relates to growth and maintaining this momentum that you saw in 2024?
Yeah, I think some of the themes we talked about, but I think if I could summarize it, really is that commitment to profitable growth through focused innovation, expanded distribution, and enhanced efficiency. I think those three items really are going to drive our execution in 2025.
Great. And then maybe my next question here would be on Imperial Brands, just maybe to dig at that a little bit. They've been a very supportive investor and strategic partner to Auxly. They're also a very large and very successful global fast-moving consumer goods company. How has this relationship and how can this relationship help Auxly achieve its vision strategy of being a global leader in cannabis products in the future?
Yeah, Andrew, I'll take that one. Just a reminder to the audience, Imperial Brands is our strategic partner, and last year they converted $123 million of debt into 19.9% of our equity, which I think reflects their confidence in our ability to navigate and thrive in challenging markets and build brands and products and know-how that can eventually be exported to their key markets. And I think, as you mentioned, Imperial is a truly global company operating in approximately 120 countries worldwide, where many of which they've been operating for generations. So they have, deep market understanding, established infrastructure, large boots on the ground sales teams. And then some of their key markets like Germany, the UK, Australia, United States are also key international jurisdictions that are growing and evolving towards broader legalization. So look, we look forward to building on our great relationship as we start to advance towards our vision and take steps in those markets where their deep regulatory and commercial expertise and their capabilities can be very helpful to help us take more meaningful steps in those markets and with greater assurance when we do decide to enter. Hope that helps.
Yes, that's excellent. Thank you very much for that, Hugo. Unfortunately, in the interest of time, I think we'll probably have to leave that there. But I want to thank the Auxly team, Hugo, Mike, Travis. Thank you so much for joining us today. Thank you for your presentation, and congrats on a transformative year for the business. Again, to the audience, this is Auxly Cannabis Group, ticker symbol XLY on the TSX exchange here in Canada. So thank you.
Thanks,
again.
Andrew. Thank you.
Our final presenter today is Rubicon Organics. I think it's fair to say that no one does BC Bud quite like Rubicon. Following a near sweep of the 2024 Kind Awards, where Rubicon won such awards such as Brand of the Year, Best Flower, Best Vape, and Best Edible Product, among others, Rubicon has repeatedly demonstrated its commitment to deliver a premium cannabis experience to consumers. Leveraging its organic certified cultivation facility in Delta, BC, the company has expanded its brand reputation and has become a leading supplier of ultra-premium and premium cannabis products across the country. The company recently launched its first ever vape product, received key certifications needed for international exports, and announced the acquisition of an additional cultivation facility in Hope, BC, all in recent months. Very pleased to introduce CEO Margaret Brodie, who will speak more to the company's plans for 2025 and beyond. Margaret, please go ahead.
Thank you, Andrew. And good afternoon, everyone. Thanks for giving me the last word today. I'll take it. Look, I share a lot of the themes of the current opportunity in Canada for winning companies, but today I'm going to demonstrate why Rubicon Organics offers a compelling valuation upside regardless of industry, our leading brand positioning, strong and improving profitability, and our recently announced acquisition put us in an ideal spot for growth. Today, we are the world's largest scaled organic certified cannabis company, and we deliver consistent premium products. My vision is simple: for Rubicon to be the most trusted and admired house of premium and super premium cannabis brands in Canada and beyond. And we are setting the standard for exceptional quality and value, not only for our consumers, but also for our investors. Themes you'll hear from me today: proven growth. Our track record of success shows we know how to grow and scale our business. Strategic foundations. Over the last 2 years, we have done the work and built a strong foundation for sustained growth. Significant expansion. Our recent acquisition increases our capacity by over 40% for our at-capacity brands, offering us a low-cost growth opportunity. And exceptional brands. We have built strong customer relationships and are laser-focused on ensuring our brands are front and center on shelves. Who is Rubicon Organics? For those who don't know, a few key highlights. We're Canada's #1 premium licensed producer with over 6% market share in the premium segment. Our success is attributed to two critical areas. Firstly, from day one, we've been committed to delivering consistent, high-quality products that win over our consumers and bud tenders alike. Our focus is on quality through every part of the process, from cultivation to product development to how our people show up in store. It's absolutely essential when you're competing within premium and super premium categories, and it's made us a leader in the industry. And our team has deep cannabis experience coupled with a long history in the competitive CPG industries. We're focused where we can outcompete and win rather than trying to be everything to everyone. As Andrew kindly mentioned, in the 23 Kind Awards, the Oscars of Canadian cannabis, voted on by bud tenders, not the industry, but bud tenders, Rubicon Organics won Company of the Year and the written-in People's Choice Best Weed. But just in December in 24, we dominated, winning across multiple categories, including Brand of the Year, Flower of the Year, Vape of the Year, and 8 others. We're now in our 3rd year of profitability and have proven that our leading brand platform provides an incredibly strong foundation to launch new products. To that end, in 23, we launched the first ever live rosin edibles in the Canadian legal market. We quickly captured 30% share in premium edibles market. Then in 24, our vape launch has also leveraged our leading brand strength, where we went from a standing start in May to over 55% distribution nationally. And that was just for September 30th announcement. While we also won Vape of the Year, Product of the Year, New Product of the Year at the Kind Awards. And we expect to continue to see strong growth in the vape segment. It holds about 16-17% of total cannabis market now. In the US, it's closer to 30%. So we're going to see more growth in that market, and Quebec is coming online in late 25. We also now have 5 SKUs in market and expect in 25 this could generate growth over 20% of our 23 net revenue. Our successful product launches are a result of focus on and the ability to deliver leading quality products. In a market where the consumer can't see what's inside the package, we have a lot of consumers being let down and they've lost a lot of trust in brands. We believe that our consistent best-in-class quality is delivering a brand trust and promise. And this is evidenced in our new product launches. We have proven our quality reputation is allowing us to enter new categories and win. And it's not just winning through the first opportunity to try something new, it's the repeat purchase that we can get. Why is this successful in vape? Premium vape is only as good as the flower inputs that we create, quality in, quality out, and our vapes use our best-selling and consumer-loved strains, so we're able to quickly demonstrate high quality to consumers. Enough about vape. What else do? We have Canada's #1 wellness brand with Wildflower, over around 30% share of the topicals market. Wildflower is at a higher price point, and we have a relatively lower SKU count to our competitors, but it's about the consistency of a premium quality product that's winning in market. And it's our view that Rubicon brands are strategically positioned to win high-value industry multiples, typically seen for premium leaders in analogous industries, namely with CPG. Look, in the last couple of years, it's been quiet and down cannabis markets, as we all know, and Rubicon has been focused and disciplined to build our business and lay foundations for what we believe is to come. So why Canada? The market is finally experiencing the long-anticipated shakeout, accelerated by non-competitive operators choosing to move their business internationally into markets where profit and success is easier to achieve. And you've heard that from several teams today. However, initially, Canada was marked by inconsistency, low quality products, overly broad distribution, and many consumers returned to the legacy market. But that landscape is finally changing, and we're seeing 3 large themes emerge. Firstly, an significant improvement in product quality, but there's still a large gap from value to the premium segment and a large amount of inconsistency experienced by consumer when they go to buy product and what they experience with it. Secondly, provinces are streamlining their SKU counts based on operator reliability and rate of sale, making it harder to get products on shelf. And lastly, consumers are growing more consistent with their choices and brand promises are starting to emerge, offering them trust of value for money. Looking to the future, we expect increased barriers to entry, and it's going to get more difficult to get on shelf, and the strongest brands will survive. Our brands are strategically positioned to thrive in this new environment. With our brand strength, consumer affinity, and high supplier ratings, we ensure that we remain competitive and relevant. And those who know me know I'm nothing if not competitive. This is a time when brands that will be on shelf over the next 30 plus years are being built. We've seen the cannabis industry go through the classic hype curve. We've talked about it earlier, highs followed by a low, and now we're witnessing a resurgence of the winners as market matures. This time, we believe the cannabis curve will be a lot steeper and more sustainable, thanks to growing demand both domestically and internationally. We're already starting to see wholesale prices increase, driven by a tight supply market. Some of our peers are beginning to increase price on their products, but we haven't yet seen that in the premium segment. And international's opening up, and we expect tremendous international demand growth. We've discussed this before, and I've certainly said it, that cannabis legal market is still in the early stages. We've seen impressive growth, but we're still scratching the surface. It's estimated 30 to 40% of cannabis buyers are still purchasing from the legacy market, and a new generation of consumers are entering. We expect them to purchase in legal cannabis. In 25, Quebec will allow non-flavored vape products, bringing a new consumer group into the legal market, and it presents a big opportunity. We're also seeing demand internationally, and as these markets come online, there is significant supply shortage, and it will take some time for other countries to be able to get supply online. We're well positioned to capitalize on this in premium, and in particular with our planned acquisition and our premium operational know-how. Look, and cannabis is accretive to Canada's GDP. It isn't impacted by the same trade wars affecting other industries, and our export customers are not reliant on the US. So despite a challenging market of the last few years, we've outpaced industry growth, and we expect that to continue. Through our Hope acquisition, which I'll talk about shortly, we've increased our capacity by over 40%. This, combined with our long-term third-party supply agreements, will help us meet growing demand. We're increasing our market share in the vape category with our 55% distribution in the 6 months following launch. And as I mentioned, Quebec Vape is just opening up in Q4 of 25. Our edibles portfolio is growing rapidly with 185% year-on-year growth last year, and since launching our new-to-market live rosin edibles across both 1964 and Simply Bare. Our leading genetics are very exciting. We have released several high-performing flower SKUs last year in 24, with several of our current leaders were actually new launches, and we have a lot more to come. You're going to hear more from Rubicon about that in future. We've also received our GACP certification and are preparing for our first international shipment this quarter, and I'll speak to that shortly. Most importantly, turning to supply growth plans, we have a 125,000 square foot facility in Delta, BC. It's already producing some of Canada's best premium cannabis, and is the only scaled organic cannabis operator in the country, but we're expanding further. We last week announced a planned acquisition in Hope, BC, which brings incremental 41% capacity for just $4.5 million purchase price. It's an incredible strategic purchase. It will cost significantly more to build that today, and we'll fully own the facility and all the real estate, allowing a stronger balance sheet and future optionality for Rubicon. Due to our desire to have more control over our supply chain, and because our demand for our leading brands requires additional capacity, Hope will allow us to grow our footprint and our production capacity by about 4,500 kilos, bringing us to 15.5 kilos of premium production. The facility was the first licensed facility in BC. It's just an hour and a half from our existing Delta facility, and it means our existing team can get out there and get it performing and pumping quickly, with first harvest expected in 25. I'd note that the former owners had disclosed production capacity of 6,900 kilos, but we pride ourselves on under-promising and over-delivering, and we have a track record of doing that, and we want to execute on our promises. So I'm confident that this new facility will continue that tradition. This expansion will meet unmet demand in Canada and allow us to open up international channels. In 25, we're testing routes to market internationally, and this acquisition is a key step in positioning for future growth. I should put an aside there that look, Rubicon is satisfying and committed to our domestic Canadian business first. So our positioning is unique. The market is changing. We've heard that today. Many smaller and craft premium companies are struggling to maintain consistent national shelf space and are pivoting out of the Canadian market into international markets, taking their brands off shelf domestically. As SKU rationalization continues, only brands with strong, consistent supply chains will stay on shelf. Furthermore, it's difficult to get SKU listings with the provinces, and it will only become more so with further expected SKU rationalization and more sophisticated KPI-based purchasing strategies. We fully own our facilities, which gives us greater control over our supply chain, and this positions us to weather supply chain disruptions, to stay on shelf and keep meeting consumer demand, building brand. On the competitive advantage side, in the next slide, I'll talk about our premium portfolio, but first to brand loyalty. What you will see is Simply Bare and 1964 rank in the top 5 brands for the last 2 years, most recommended by budtenders, as done by third-party surveys. And we won Huge at Kind, voted on by budtenders, and they are our most discerning customers. As for profitability, we've delivered 2 years of positive adjusted EBITDA, and we're on track to achieve the same in 24, less our one-time ERP costs, which we incurred last year intentionally to get our business ready for growth. We focus on high-margin premium products, but we work to get the right product on shelf at the right quality, and now we are focused on the cost base and improving margin. That will be a story for us in 25. We've led the way with creating new and exciting genetics that appeal to premium consumers, with 14 genetics launched in the last 12 months. We're constantly innovating with a strategy to be best to market, although sometimes that is first to market, like in our live rosin edibles. So if you're not familiar with our brands, let me introduce them. Simply Bare Organic, our super premium brand, focused on delivering the highest quality cannabis to the most discerning consumers. 1964, a premium brand inspired by legacy genetics, designed to appeal to both legacy and new consumers. Wildflower, the #1 wellness brand in Canada, specializing in CBD topicals and products that promote holistic health. It's a premium product with a smaller SKU count than our competitors, but given the quality of that product, garners about 30% of market share. And Homestead Supply, it's a brand that monetizes products outside our top quality standards while providing customers a great value for quality. We hold around 6% of the premium market in Canada, and our brands are experiencing double-digit growth in BC, Ontario, and Alberta. We've demonstrated a proven ability to capture market share in both new and existing segments, and the vape and edible categories are highly competitive, yet we entered them with rapid execution of new product releases with strength and quality of products, and we were able to swiftly bring products to market, maintaining exceptional quality, and it's been a key driver in us capturing more market share, reinforcing our leadership in the premium segment. We're in a quiet period right now on the financials, so you're going to hear more from us in early April, but we continue to show growth. We've already demonstrated consistent growth in revenue through the year to September 30th. We're in a strong position with nearly 10 million in cash and a newly secured 5-year debt facility at a highly competitive interest rate of 6.75%. And we've been strategic with our capital. The Hope acquisition is a prime example of our opportunistic approach. And I can tell you, we looked at a lot of things. So we have a tight cap table, 44% insider ownership, and our management team and board are highly incentivized to deliver shareholder returns. Looking at our balance sheet, you'll see that our valuation is extremely low relative to where our business is and our growth trajectory. Look, shelves and brands are being built today in Canada. Controlling your supply in the short term is key to current and domestic international demand. And now that we've proven we can expand and build on top of Canada's leading premium brand portfolio, we're approaching our next phase of growth with the Hope acquisition, and that provides additional capacity in addition to our existing contract grow manufacturing relationships. And we have an open marketplace to continue releasing new flower and product innovation. We believe we're fundamentally undervalued even before the announcement of the Hope acquisition. But given the proven brand strength and our ability to expand our leading brands with additional product launches, segment entrances, we now believe there's even larger valuation gap that's emerged. And the Hope facility increases our capacity over 40%. It allows us to scale and expand our brand expansion strategy. And we plan to deliver improved gross margins with our cost-saving plans, which will bring right to the bottom line. And I'll speak more to that when we get to our Q4 results. So the last point I should make is on our international expansion plan, which we will undertake in a similar crawl, walk, win strategy that we previously executed in flower, then topicals, then edibles, then vapes. And look, it's our view that Rubicon brands are strategically positioned to achieve high valuation models in future akin to similar industries, namely CPG. So I want to thank Ventum and everybody for joining today, and hopefully the best was saved for last, and on to questions.
Absolutely. Thank you very much, Margaret, for your presentation. I'm going to start off with the news that's obviously pretty hot off the press. I want to talk about the acquisition of the new cultivation facility in Hope, BC, and congrats on that announcement as well. So you mentioned that this would represent an increase of about 40% to your cultivation capacity. How would you allocate that the cultivation capacity between your own brands here in Canada, maybe between flower and supporting your vape launch, as well as for potentially international opportunities? How will the supply integrate with your various distribution channels for your products?
Great question. Look, similar to what others have said, winning at home is critical for your brands. This facility will not be organic, certainly not at first, and we're going to consider whether that's the direction we want to go. Therefore, it won't be able to supply into our Simply Bare Organic brand, but it will allow us to grow more Simply Bare Organic at Delta and expand out that brand, which is our more profitable and premium SKU, and that's exciting as well. So in first instance, it's going to move into 1964. We are testing and learning on international. We have unmet demand for both 64 and Simply Bare here in Canada. So I believe it'll go to there first, but we will look to put some of it to international. I don't have the numbers yet. I wouldn't say half, but TBD, and ask that question again in 6 months.
Great, and maybe I'll poke a little bit more on the international aspect of that, because again, this is fairly hot off the press. Rubicon receiving some key certifications that allow for international exports. Maybe if you could kind of give us a sense of where do you think the company is going strategically or wants to position itself strategically as it relates to international markets. I think we've heard varying strategies on the call from companies that want to have a significant share of their revenues in international markets versus some that want to be strictly in Canada. Where do you think Rubicon will ultimately go with its international strategy over the coming years?
Well, personally, I'd love to have a brand in a market, and I'd love to do it sooner than later. But actually, I think some of that is ego talking. Really, what's happened with the U.S. and tariffs and trade wars, et cetera, go to show that you want to win at home where you're in a safer, protected market. And I think that's some of the risk that you see in the international markets. I don't believe that there is a race to get there. I'm quite happy to let other companies spend their time and money creating those routes to market, because we've shown in Canada, we weren't one of the first LPs. We've shown in Canada that premium product, there's a market for it. I don't think we try to be everything to everyone. We're going to learn. We're looking around this year, and then we'll drive forward likely in one market with one team. But TBD, we don't have the answer to that yet because we don't want to make assumptions. We still believe that the premium market is not really established in international markets. We see a lot of people assuming that a large individual nug means it's a premium product, but that doesn't speak to smokability, consumer experience, unique genetic, et cetera. So I believe that in 2-3 years, it's going to be very exciting for premium products internationally, I think, as that market evolves. But right now, I think it's still reasonably small. And so it allows us to test and learn, continue to grow in Canada. And I think we'll just have more value then. If you think to what my ambitions would be, to have more capacity, right? More capacity in a market where there is a shortage of supply. Full stop. That's the story of this year, I believe, in 25.
Great, and that's very helpful. Maybe just quickly, one more. Could you maybe comment on, the company recently launched into vape product category in Canada. Could you comment on how that launch has gone for Rubicon, and what maybe additional product categories or products we should expect the company to launch in 2025?
Well, I think there's more to come on what we're going to launch in 25, so I won't speak to that. And I like to keep some of my cards close to my chest. We like to announce when we've got it locked and loaded, and we know we're going to deliver. And that's what you've seen with edibles. We hint at something, then we go and we do it. Same thing with vape. The vape launch went very well. We put our strongest people on the project, and we focus on it. We asked ourselves, what is best in market, not what is cheapest from a margin perspective. And then we can work on cost from there. And we want to make sure that the channel works and the consumer has the right product quality. I think that is still a tremendous growth area. What we did was best to market. That's our innovation strategy. You're going to see that from us internationally as well. What's next? I think genetics is the biggest story. We've got a few plants growing in the facility right now. I am buzzing about. I think some of my colleagues touched on it today, but genetics is a story that the market has not yet figured out the value of. And I think it's an opportunity for Canada to win in the world too. I think it's going to be a very significant growth opportunity for these companies.
Great. Well, thank you very much, Margaret, for presenting today. And again, to our audience, this is Rubicon Organics, ticker symbol ROMJ on the TSX Venture Exchange. Thank you very much again, Margaret, for your presentation.
Great.
And with that, that concludes our conference. I will just quickly go over some concluding remarks here. I think it's no secret that the Canadian cannabis market has been incredibly challenging. It's been challenging for investors. It's been challenging for the companies who operate in the industry, which have historically been characterized by widespread, intense competition and longstanding oversupply conditions. However, what we just saw today was there exists a group of companies that have profitably navigated this incredibly challenging landscape. These companies that are presented here today have demonstrated consistent growth and market share gains. They have focused strategies, and they strive for market-changing innovations. With broader industry conditions finally showing signs of stabilization and as international market opportunities rapidly develop, we believe these battle-hardened companies are primed to be leaders in the Canadian and international markets. Moreover, after years of investor fatigue, most of these presenting companies trade at between 4 to 7 times annualized run rate EBITDA. also offering attractive valuations for new investors. As Peter highlighted in his prepared remarks, we believe that these companies offer a compelling investment opportunity. Both Peter and myself, as well as the Ventum team, aim to help investors navigate the cannabis industry and provide actionable, insightful investment ideas. I want to thank the audience for attending today. We hope you enjoyed the conference, and we look forward to hosting our next one. That concludes today's conference. You may now disconnect. Have a great day.